So you are probably watching this video because you lost a lot of money day trading the Forex market, crypto, whatever. So I'm here to help you with your trading. Psychology, the mindset that you have to be a day trader. To be a successful day trader is very systematic. So in this video, I'm going to give you 5 rules that you must follow in order to be a good trader, to improve your trader psychology, and to relax when trading. Okay, here's what you are probably doing. You are getting into the market, you are watching price action, you are seeing movement, and you get in a trade with no other analysis besides the fact that the price is trending up like crazy. We just had this huge spark. I'm going to get in or I'm going to get out as quick as possible. Even if you get into profit, you don't take it because you think it's going to go even higher. Then it goes reverse and you are like, no, it's going to go back to where it was and then I will make money. And then it keeps going down and down and down, and you are like, no, eventually it will go back up to where I entered and I will get out there. You get in a trade with emotion and you didn't get out even when you are in profit, and the loss threshold does not exist, so you blow up your account eventually. If this is you, welcome to the club. You are part of 95% of traders that lose money. But that's okay because I have a solution for you guys. So jumping into this chart, I want to show you one example of how this happens day in and day out. You see this big sloping green up? Everything's going, we get this massive bullish candle. We've broken previous level or whatever. You get in on a trade, the next candle starts going red, but because you don't have a good strategy, your stop losses are too tight, these two next red candles stopped you out. Then you get another bullish candle. You are like, oh my god, I'm going to get in on this. It's going up. So you buy again, stop losses are way too tight, next 3 candles stopped you out. This next candle goes up and you were like, oh my god, see, I knew it was going up the whole time. I'm gonna get in on this and I'm gonna hold it. But stop loss is too tight, you get stopped out. It happens again and again and again, to the point where you are like, okay, last one, I'm holding it forever, and all it does is go down. This is the typical waiting for gambler mentality of trading. Like people capitalize on this day in and day out. This is why you have to have a rule-based trading strategy. What do I mean by rules-based trading strategy? When you are starting out day trading, you have a strategy, right? And then you backtest it, then you demo it, forward testing it. This strategy is the only thing that you should use. So say for example, your strategy is moving average strategy, and then you only go for short position when it's below the 20 simple moving average, and long positions when it above. What you also need to have is multi-confluences. So we have below the 20 simple moving average, we are showing bearish momentum, and then let's say you are using doji candles as part of your strategy. Then you get a doji and you're like, cool, I'm in on the trade. That is 3 confluences that you use to enter a trade. That's what having a rule-based trading strategy is. You have to have these 3 things minimum to hit in order for you to enter a trade. You do not get in on a trade because the price is going. That's wrong. Literally just get a piece of paper and write down your rules. You do not enter a trade until these 3 things or 4 things or 5 things are met. When you are looking at the chart and you are saying something, don't click the buy or sell button, check your list first. Make sure you've hit every single one of those, and then you will know it's not emotional, it's strategic, then you get in on the trade. So rule number 1 is rules-based trading. You have to trade on rules. Rule number 2, do not trade on emotion. When you get emotional, that's gambling mentality. That's market manipulation and it's funnest. Basically teasing you with something, you fall for it, and you are stuck in the trap. It happens time and time again, and it's why 95% of traders lose. So rule number 2, do not trade on emotion. If you are in a bad mood, if you've had an argument with your spouse, stuck in the traffic, super anxious, do not trade. If you are angry, turn off your phone, turn off your laptop, get away from the chart. Do not trade. It is the worst thing you could possibly do ever. Rule number 3, it is risk management. Proper risk management when day trading is the worst crucial thing ever, because if your rule-based trading strategy is set to where you are risking 1 to 4, meaning that you are risking 1 to 2% per trade, and your reward for that is anywhere from 4 to 8%. That means if you win one trade, you can afford to lose next 4. So never ever click that buy or sell button without having a specified take profit and a specified stop loss in place. Rule number 4 is do not overtrade. The tendency for most people, especially if they are like me, they can sit in front of a computer and watch the chart all day. It's like 57 traders running at the same time and it's breaking apart your focus. You're looking at too many different things at the same time, and that's mistake coming into play. I've done that several times, where I'm looking at USD CAD doing my analysis on that, then I pull up my phone on Metal Trade 4. I type in, whatever, I place a trade, and I realize that I just placed a trade on GBP JP when I'm doing all my analysis on USD CAD. Do not overtrade. Do not look at too many indicators. Focus on 2 or 3. Simplify it. It's not complicated. So rule number 4, keep it simple. The most important rule of all, rule number 5, do not revenge trade. What is revenge trade? Say you just lose the $2,000 on a trade and you're like boiling inside, just furious. And so you are looking for the next move and like trying to get your money back because it's my money, the market just stole it from me. And you start getting angry and you are completely throwing away your rules-based system. You are overtrade like a crazy person trying to get the money back as quick as possible. And what happens when you trade with emotions? You lose the time and time again because the markets are looking for people like you, getting emotional, falling for trap after trap after trap. And instead of just losing a couple of $1,000s on a trade, you end up losing $10, $50, or $20,000 through the day because you are angry, you are revenge trading. So rule number 5, do not revenge trade. Ever doing these things, practice on a diamond account. Really having a strategy that is rule-based, it completely alleviates all of the emotion from the trading. Okay, if you guys are stayed here this long, that means you are like this video. So make sure you have subscribed my channel and leave us a like on the video. I'll see you next time. Bye.